Wipro declared its numbers yesterday. Look at the counter move initially, 4% in terms of decline. They declared numbers yesterday evening. I caught up with the management earlier, Jatin Dalal, CFO, as well as Mr. TK Kurien, CEO and board member at Wipro. And I started by asking Mr. Kurien that order wins have been very strong in the last 3 odd quarters, but execution somehow doesn't really seem to happen. Let's listen in what he told us.
So a couple of reasons. The biggest reason is this, that if you look at our oil and gas portfolio, we have lost over $100 million in that particular portfolio over the past couple of quarters. And that's been a big decline. Frankly, that caught us by surprise even last quarter. I think that's the primary reason for the issue that we had in terms of revenue growth. Besides that, if I look at each of the verticals, both healthcare, retail, and also manufacturing, all three of them feel pretty strong at this point of time. The one vertical that is going to be flat for us compared to last year is going to be really telecom, minus the cross-currency impact. Banking and financial services is probably going to be weak for 1 quarter, and we see recovery after that. But oil and gas is one segment that I really cannot predict as we speak. Because last quarter, what we thought was going to happen did not happen. In fact, that's affected our revenue and our absolute number for last quarter. So this quarter, we are being a little more cautious to where it will finally go.
Right. Mr. Jatin, can you take us through, what is the impact of oil? Mr. Kurien briefly mentioned that it's difficult to predict, but you feel that at least in Q1 and Q2, it may be slow down before we eventually see a pickup in the oil demand?
Yeah, certainly. I think we are in the phase 1 of such an industry event that we have seen some industry go through. We are at a stage where a lot of uncertainty exists in the industry, where customer is absolutely relooking at the cost structures that they have, and their first reaction is to freeze. But always as a follow-through action, what we have seen is that customer then goes out and gets into a consolidation, cost reduction, capital preservation kind of exercise, and that means a lot more work in phase 2 of such an event. And we do hope that quarter 3 or quarter 4 onwards, or quarter 3, quarter 4 onwards, we should see some of that spend coming back to us in terms of the increased demand from this sector. The good thing is we are very well placed, right from positioning, our strength, the way customer perceives us, and therefore in medium term we remain bullish that whenever the spend comes back, we should be a better place vis-a-vis capturing that demand.
Right. Mr. Kurien, large energy clients are actually taking in a lot of vendor consolidation to cut down their cost. In this scenario, how would Wipro pitch to them to maintain their market share?
In the past 3 months, we have competed in roughly 3 large consolidation deals, apart from the ones that are work in progress. And guess what? We have won all 3 of them. Given the leadership that we have in the oil and gas sector, we are very confident that we will be the consolidators in the space. And I think that's the value that we have. That's the domain expertise that we carry. And that's the years of experience that we have within our customer base. And that's a huge lever for us to kind of make sure that we are able to actually make impact here. So, unfortunately, many of these deals, after they go through transition, the revenue would not kick in the first 2 quarters. It will probably kick in by quarter 3 and quarter 4. That to some extent gives us positive visibility in terms of what's going to happen in quarter 3 and quarter 4. However, the negative is what we really cannot today forecast.
Right. Just a follow-up on the same thing. Going ahead also, you expect that in this consolidation, you would emerge as one of the top leaders?
Absolutely. And that is, after having built leadership in a particular segment, the last thing we want to do is give leadership up. So if there is a share game, we're going to fight that.
Right. But, Mr. Kurien, okay, X the energy space, still the execution has been weak. It's not been particularly great at Wipro. What do you think needs to be changed, or what essentially is going wrong?
So I think, if you look at it, last year, if you look at our absolute growth rate in constant currency, it was 8.7%. And if you take out the oil and gas impact that we had of roughly about 100 million, which is the run rate, by the way, that we lost last year. This is if we had $100 revenue in the previous year, last year we lost the $100. If you look at the 100 million approximately that we have lost, that takes away another 1.5% of our growth rate. So really, if you look at it, negative, without oil and gas, we would have been, without any growth in oil and gas, we would have been roughly at around 10.2% in terms of absolute growth. And that is what that's something the numbers don't necessarily reveal, because a large part of our customer base today, especially in oil and gas, is sitting in euro currency, and euro itself has been affected. The most admirable thing that we have done in this space is, in spite of the euro decline, we have done a fabulous job in retaining margin. And Jatin can throw a little bit of color on that one.
Right. Jatin, I'll come to you for margins in a bit, but I just wanted to get a sense about the revenue and execution first. Last 3 to 4 years, growth for Wipro has been at the bottom end of the top 5 IT companies. FY16, the indication is that you may start on a lower side and then end up on the lower side. But at least in FY17, you expect a pickup or an industry-leading growth from Wipro?
I wish, we were all living with that long visibility. Our sector has two beautiful aspects about it. One, it's very, very stable because we rarely lose our customers. Roughly 96-97% of our revenue comes from the same customer. But the other aspect is that if you were to ask, 5 quarters down the line where you would be, it would be almost impossible to predict. So FY17 is a far off thought. FY16 also, frankly, is something that we have to execute as we go. And current quarter is what matters the most, and that's what we are focused on.
Right. Jatin, so let's focus on this quarter and the guidance that you've given. How much of it is factored in terms of currency, as well as the large volatile moves that we are seeing in currency? We spoke about energy in detail. About currency particularly, how much has been factored in?
So if you see our guidance, it is stated in the constant currency, and that is really the average exchange rate that we received or that we realized in quarter 4. So our guidance to that extent is neutral to the quarter 4 currency to quarter 1 currency, the way we give our guidance. While that is true, it is important to point out that versus quarter 1 of fiscal 14-15, the growth rate would be on lower end 7.8% and higher end 9.4% if I adjust the currency with the currency that existed in quarter 1 of 14-15. And the actual growth delivered in quarter 1 last year was 8.1%. So we are certainly not decelerating, adjusting for currency, even after taking the hit of energy that TK and I spoke about.
Right. TK, we spoke to TCS after their results, and they very clearly told us that the huge volatile moves in currency that you're seeing across the world is making it difficult for them to predict their revenues, the outcome of client deals. Do you agree with the same?
I think absolutely. If the currency has gone down, the euro has gone down by 30%, you're fundamentally talking about a different equation here, including a different cost equation. So I think, in many ways, the good thing about a currency change is that it just helps you to get more competitive. It helps you to get leaner. And more importantly, it helps you to get much, much sharper in terms of what you do and what you do not do. And I think the IT industry by itself, in many ways, we've been globally competitive. And I think we have built for ourselves a tremendous capability of actually going and reacting quickly to the marketplace. And I think that's a huge positive. And I think that will really hold us in good stead going forward. So the answer is pretty simple. It is going to be a tough year, but don't write the industry off because of 1 year.
Right. Jatin, a view on the margins. I think that was the key positive number that you would take on. Have you taken any cost-cutting initiative, or is it because of higher utilization?
So it's absolutely all of it. We knew as we entered the quarter that we will have headwinds in terms of the cross currency, which will impact our revenue and also impact our margins. And we remained focused on the operational improvement. Utilization you've already seen, but I think the story is far beyond that. The story is what productivity and realization uptick that you can generate through next generation delivery models such as automation, artificial intelligence, deploying robots in some of the infrastructure related work that we do. So some of these things, even on a smaller scale, has started contributing. Therefore you saw that we were able to deliver margins ahead of Q3 margins despite a headwind on cross currency.
Right, Jatin and Mr. Kurien, thank you so much for joining us here and explaining what is expected out of Q1 FY16 as well as what do you make of the quarter that has gone by. Counter, however, is down about 4%.